Uh, Hello, my dear friends, my dear future chartered accountants. Welcome to day one revision Premier League on financial reporting. This is CA Chinmaya Hegde, your learning partner for CA Final, FR, and SFM. Before we go further, I hope my voice is audible and the PPT is visible. Please confirm it by way of chat so that I'll get a clarity. Is my voice audible and the PPT visible clearly? Can I get some reply? Okay, good. Let's move ahead. So we are going to have this revision classes for next 8 days from 11 a.m. to 2 p.m. So far, we were attempting to write the exams, and now CA Institute is attempting to conduct examinations. But things are very clear now. Examination is going to happen. But whatever happens, you have to read and you have to pass. In that context, you have attended the last 8 days on quite a few other subjects. Hope you are following our channel. Now, next 8 days in this slot, we will focus on financial reporting. Regarding the syllabus content, please watch this. That is, I have given a clarity earlier. New syllabus, I will be brushing through all topics, but old syllabus, only about 50% I will cover it. If we are able to complete everything successfully, then I have one buffer day. Maybe I can try to talk about old syllabus topic little bit more in detail, but I'm not guaranteeing you that. We will take that at the okay. Okay, I think there was some internet disconnection problem. I hope it is fine now. Are you able to see my the PPT, and is my voice audible? Okay. Hello, my dear friends. We are back. I hope now my voice is audible. Is it fine? Is things going fine now? Please confirm. Is it fine, my dear friends? Okay, good. Hopefully, the internet connection things goes fine. So please bear with me for that second. So we are all learning. So internet is also hopefully that it will help us. Hope everybody is ready for the examination heist on the financial reporting. As I told you, this is our daily plan, and we have the notes available. As I told you, I'm not sharing the charts. You need to take it down while I'm explaining, or you can take a screenshot. But questions which I'm going to solve is given to you in the form of notes. I hope you have downloaded already, because I will be solving full-fledged questions. I will be solving full-fledged questions. So if you don't have notes along with you, it's difficult for you to follow it. Now, how much marks you can expect if you attend all these 8 days clearly? I'm not going to tell that you will score 60, 70, 80, 100 and all. I don't want to give false promise. But definitely I can assure you that you are going to score 40 plus for sure. That is to say that I will be covering a content such a way that it will be sufficient for you to pass the examination. That much confidence I can definitely give. Okay, hope you are all are with me now. Let us go into the topic. Is it still a problem? Is video is available, right? My voice is audible. PPT is. Can you see this now? Okay, fine. I hope things are fine. As I told you, for old syllabus, some of you are asking for the old syllabus, friends. Uh, okay, some of you are asking for the link again. I'm sharing the link again in the channel. Please check it out. Okay, so now regarding old syllabus, I've made the clarification already, my dear friends, that 50% syllabus will be covered. For old new syllabus, I'll be trying to cover everything. So before we go into the topic one by one, let us begin the thing on which is going to be uh, focused on. So I've given you this the last 4-year attempts for new syllabus, the topic wise allocation of marks. For old syllabus also, I've shared this in the channel. You can go and search for it, you will find it. This is also I've shared it earlier. Fine. So this is the focus. So please see how Ind AS 1, 2 and all they've been asked. This is the allocation of marks across last 4 attempts. The detailed screenshots are available in the channel. You can take it from there. Now, I don't want to go too much into it. This is just to tell you the idea behind which topics have been asked in the last 4 examinations. So this is the list of standards, and these are the list of topics which have been asked in other chapters like financial instruments, share-based payments, and the other standards, business combinations, and consolidation, and so on. This I don't want to talk about it. Anyway, it's available in the channel. You can download. But I would like to focus on this. That is to say that which are category A chapter, category B chapter, and category C chapter. ABC analysis, I would like to address that first. Now, consolidation is going to be of utmost importance. I know many students don't like it, but that is my number one focus. And in connection with that is business combination, financial instruments, share-based payments, Ind AS 116, 115, which are newly born standards now. So this, I would say, from this around 40 to 50% you can assure. You can say that around 50% of the questions will be focused on these areas. Even our discussion will be focused on these areas. Even for old syllabus, consolidation applies, financial instrument applies, share-based payments applies. These things, the Ind AS 103, and just give me 1 second. Just give me 1 second. Okay. Business combination is different for old syllabus. So business combination is not applicable, but consolidation is applicable for old syllabus also. Financial instrument is applicable for old syllabus also. Share-based payments is applicable for old syllabus also. Fine. Okay. Now, category B topics, basically Ind AS focus, and these are the standards which are important: PPE, impairment, employee benefits, income tax, forex rates, EPS, and I will also be solving problem from these areas to give you the confidence. And remaining things like category B topics will come around 25 to 30 marks, and remaining around 20% will come from the category C topics. So this is the main focus for new syllabus portion. Old syllabus, whatever common topics, I'll be discussing it. Fine. Okay, so before we start further, I don't want to talk about any like anything like a motivation kind of thing. You can go for it. I think you have got motivation already. Your examination is coming near, means motivation is also coming. But one point I would like to stress upon, that is connected with the accounts, how you can motivate. Fine. So I would like to talk about that. You know, basic accounting assumptions. Basic accounting assumptions. Okay. Can you name this? Basic accounting assumptions. What are the basic accounting assumptions? For old syllabus also, new syllabus also. Basics of accounting standards. Yes. Consistency, going, okay, let me start. Going concern, consistency, and accrual. Okay, don't worry about my handwriting. All my solutions are in the PPT format, so it will come in a better handwriting than this. Going concern, you know the meaning of it, but apply this in your life, which means whatever happens, never give up. Your concern should never go. If concern goes, no going concern. You should always be focused on your examinations and on your goals. No matter what happens, never give up. Going concern principle. Consistency. Put your efforts consistently. You cannot win anything in one day or 1 hour. You have to put every day consistent efforts. Same thing with respect to accounting policy. And the last but not the least, accrual principle. So what is accrual principle? Account for as and when things happens. Do not wait for its actual realizations. But what is applicable for you now? You are putting the efforts now, but results will come later. The marks card will come later. But today you are putting the efforts. So just because you're reading today, don't expect the results today itself. But remember, all your efforts are getting accrued. All your efforts are getting accrued. It will be realized maybe later, but take the note. If you want to realize it later, put the efforts today. So 3 accounting assumptions is what you need to apply in your life to be a successful person or to be a successful chartered accountant. So keeping this accounting assumptions in mind and basic principles in mind, let us go ahead with the topic. Okay, fine. I will not be spending too much time. I will glance through this. So accounting standards typically talks about these 4 areas. So always keep it in mind. Accounting standards will talk about the recognition, measurement, presentation, disclosure. Recognition, whether to take it into books or not, measurement, how much, presentation, where to disclose, and disclosure means what are the qualitative aspects that needs to be addressed. Now, regarding the application of Ind AS, again, I'll not go through in detail. It is a quick recap. Companies net worth having 500 crores or more is applicable from Ind AS is applicable from 1/4/2016 itself. And after that, all listed companies are applicable from 1/4/2017. Unlisted companies having net worth more than 250 crores from 1/4/2017. So as of now, the date to be remembered for you is 1/4/2017. All listed companies and any unlisted companies having 250 crores net worth, then Ind AS is followed. If you're unlisted company having a net worth less than 250 crores, then accounting standards issued by MCA, which is basically not Ind AS, will be applicable. So before we going to the topic on consolidation specifically, I would like to discuss some foundation principles of Ind AS, because this will come in every standard, right? So Ind AS is principle based standard as against accounting standards, which are rule based standards. And I think for Indians mindset, we like rules only, because rules only we don't follow, principle we follow. But anyway, it is internationally inspired, IFRS inspired, which is Ind AS. So principle based, we focus on substance over form principle. That is, rather than the legal formality, we focus on economic reality. Mainly we focus on fair valuation approach rather than cost approach. And in fair valuation approach, one of the main methods to arrive the fair value is the present value concept, which is time value of money. And then we have to apply higher degree of judgment, because it is more of a principle based. It changes from situation to situation basis, case to case basis. And Ind AS is applicable for separate financial statements as well as consolidated financial statements. And this one new concept is there, OCI, other comprehensive income. Other comprehensive income. So in AS accounting standard, we had some concepts of exceptional items, extraordinary items. Those things are not there in Ind AS. But still, from the reporting principle point of view, if something is non-recurring, if something is special nature, as an investor, I need to be aware of it. How will you be aware of it? That group is called as other comprehensive income. So OCI is an element of income statement, but not profit and loss. So income statement comprises of profit and loss account one part and other comprehensive income other part. And other comprehensive income comprise of elements which are non-recurring in nature, like revaluation reserve, reclassification in Ind AS employee benefits, foreign currency translation reserve, so which are not in the normal course of business, which need to be reported separately, is grouped under OCI. Okay, is grouped under OCI. There is concept of with recycling and without recycling. I would like to address that first. Fine. So once it comes to OCI, there are two methods. I repeat, once you report it under OCI, there are two methods. One is with recycling, other is without recycling. With recycling means what is meaning? It is recognized in OCI, but later it will be transferred to P&L account. So initial recognition in OCI, but subsequent recognition, that is on derecognition, it will come in P&L account. For example, foreign currency translation reserve. When the reserve is getting created, it is reported under OCI. It is reported under OCI. But once the foreign subsidiary is sold off, disposed, that FCTR will be transferred to P&L account. So initial recognition will come under OCI, and then on derecognition it will come back to P&L account. Without recycling means what? Once it is recognized in OCI initially, it will never come to P&L account. It will directly go to other reserves or other equity. So this is the route if you want to understand. With recycling means it will come to OCI, and from OCI it will go to P&L account, and of course from P&L account it will go to reserves and surplus. In Ind AS term we use the word other equity. So from OCI initial recognition, reclassification on disposal, and subsequently it will come in the balance sheet. Now without recycling means once it is reported OCI initial recognition, subsequently when it is disposed of, it will directly come to other equity, reserves and surplus. It will not pass through P&L account. Typical example is revaluation reserve. Revaluation reserve, when you create, it will come under OCI. Once the asset is sold, the profit element in revaluation reserve will go to general reserve, will go to other equity, will go to reserves and surplus directly. It will not come to P&L accounts. Fine. Now examples list is there. You can please go through it quickly because the list is not available. I made this list. Okay. So with recycling means I told you it comes to OCI, then comes to P&L. Financial asset classified as FET OCI. Old syllabus students, for you also this is relevant because you have financial instruments. Exchange difference FCTR on foreign subsidiary, that is also recycled. Hedge accounting cash flow hedge reserve also recycled on commitment contracts, forward contracts. But if it is FET OCI, equity classification financial asset, that will not be recycled. Important, revaluation reserve will not be recycled. Remeasurement difference, actuarial loss or gain will not be recycled. And gain on bargain purchase is also not recycled from Ind AS 103. Okay, so hope you got the list now. So before we go to consolidation, my dear friends, do you have any doubts so far? So Mayappan is asking, for old syllabus testing of CFS and ESOP will be on Ind AS or in AS guidance notes, sir. Okay, now regarding the ESOP, old syllabus has two methods: intrinsic value method, fair value method. And new syllabus has only fair value method. So fair value method is common to both, and old syllabus students have got the extra intrinsic value method. I repeat, old syllabus ESOP has got extra intrinsic value method, but we will solve fair value method. It is okay for old syllabus as well as for new syllabus. Okay, hope things are clear so far. So now we have done with the introduction. Let us go into the area of consolidation. Consolidation is the foundation of Ind AS. It comes in every damn standard. Therefore, getting the basics of consolidation is very, very essential. Now, my dear students, if you are, give me 1 second, is yeah, I think internet issue is there, I think. Yeah, I think now it's fine. Okay. Okay, now consolidation, coming back, consolidation. Now consolidation, just 1 second. Okay, coming back to consolidation, it is important in the sense every other standard has a link with Ind AS 103.110. So if you don't know, or if you're not able to other topics, you'll not be able to understand. So let us go into the first focus on consolidation. Okay, but regarding buffering, don't worry. I'll also be watching the preview here. So in case buffering, I will be able to know it, and I'll wait for the things to come back. So you will not miss any point missed. Don't worry about it. If it's buffering, I'll also wait. Don't worry. I can get to know it. I'll get to know about the buffering. Don't worry. Okay, is things fine now? Is it fine? Everybody clear? I think it's fine now, right? Everybody? Is it again buffering now? Is it fine? Okay, good. Don't worry. So as and when you buffer it, you please let me know in the comment. I'll keep following it. And in case if it is there, I'll repeat the points. Not a worry at all. So these are new challenges will come. We have to face it, address it. We can't avoid the problems, but we can always face the problems. So internet is a problem. Let it be. I will explain. Don't worry. So as and when an issue is there, if you miss the point, I will repeat once more. No issues at all. Fine. Okay, now let's come to consolidation. Now consolidation part, as I told you, is very important. Let us understand the basic flow of charts of Ind AS. Okay, now Ind AS, on an entity, if you have a full control, majority control, then consolidation comes under Ind AS 110, and you disclose under Ind AS 112 qualitative aspect. If you don't have a full control, you check for a joint control. What is joint control? We'll discuss in joint venture. Okay. If you have a joint venture, then classify the type of joint venture under Ind AS 111, and disclosure will come under Ind AS 112. What type of joint ventures are there? Two varieties. One is joint operations and other is joint venture itself. Now joint operations means you do proportionate consolidation method, that is you account for assets and liabilities specifically. And joint venture means you follow equity method under Ind AS 28. If joint control is also not there, then test for significant influence. If significant influence is there, then you follow Ind AS 28 equity method. If not there, then you regularly follow under accounting under Ind AS 109, that is as accounting in investments. Okay, I'm hearing 1 second. Okay, I'm getting a news that voice, some issue is there. Can you please confirm it? Is the voice is fine? Some of you are telling that voice is not syncing. Okay, I think voice is fine now. Good. Okay, so this is the overall view of the standards. Most important point is both for joint venture and for associates, we follow equity method. What is equity method? In the coming time, we will address it first. So first we'll come to consolidation, Ind AS 27. Now, an entity who is having a subsidiary need to maintain two separates of accounts. One on its standalone financial statements on its own operations, and another is group financial statements. If you don't have a subsidiary, you prepare only one balance sheet. But if you're having a subsidiary, with subsidiary you have to prepare one financial statement. Without subsidiary you have to prepare another financial statement. So you need to give a name for it. What is that name? That is called as separate financial statements and consolidate financial statement. Meaning an entity having subsidiary prepares its own financial statements, that is called as separate financial statements, where in the balance sheet you will have investment in subsidiary. So in the balance sheet asset side you will have investment in subsidiary, that is called as separate financial statements. Now in consolidated financial statements, what happens, that investment will be taken away and net assets will be replaced. So in separate financial statements, balance sheet asset side will have investments in subsidiary. In consolidated financial statements, what will be there? That investment is replaced by the net assets. All assets and liabilities of subsidiary company are going to replace investments in subsidiary. That is the basic point. Now how do you need to value this investment? Ind AS 27 says you can value it on cost basis or on fair value basis. That is cost, because usually investment is not permitted to be under fair value, Ind AS 109. But if it is investment in subsidiary, joint venture, associate, Ind AS 27 allows you, gives you a choice. You can follow cost basis. It makes no difference, because anyway this will be taken out and substituted by net assets in the consolidated financial statement. Okay, this is a basic you need to remember. So in separate financial statements you will have investments, and in consolidated financial statements those investments will be replaced by assets and liabilities of subsidiary. Okay, I am going fast slightly because it's a revision class. So if you don't know about anything, this might be slightly difficult, but you will be able to get an idea for sure, that I can assure you. Now consolidation, when it will be applicable, to be able to call I am having a subsidiary, you need to establish this one important thing, that is control aspects. That is, if you can establish these 3 points, then only it is saying that you can say there is one holding and one subsidiary. But from exam point of view, while solving full-fledged problems, it is sufficient, if one entity is having a majority of the control in another entity, then it becomes that holding company. But in Ind AS, substance over form, you should have the power. Means power comes what? Even if you have 40%, rest are all having small shareholders, with 40% only you can control the company. Things like that. You should have right to variable returns. That is, when company makes more profit, holding company should make more profit. If subsidiary company makes loss, holding company should make loss. Connection will be there. And ability to use the power. Having power is not sufficient. You should be able to use the power, called as having control. Then exception to prepare CFS as per Ind AS. Companies Act says different, but as per Ind AS, if your parent is a intermediary company, because you say A is holding of B is holding of C, now B is intermediary, therefore they need not prepare consolidated financial statement. Equity instrument not traded in public, unlisted companies, not required. As per Ind AS, Companies Act will definitely require it. And if you're not filing with any authority, then not required. Ultimate or any intermediate parent prepares, then that is also sufficient. And exception 2 is important. If parent is an investment entity. What do you mean by investment entity? Investment entity means whose job is to invest in various companies, especially private equity firms, venture capitalist firms. They don't control the company. They just invest in various companies and they are risk takers. They are not participating in day-to-day operations. They might have 60% or they might have 70%, but they don't control the operations. Their intention is not that. So investment entity, venture capitalist firms, mutual funds, private equity firms who just invest in thinking in capital appreciation, then they need not do consolidation. But imagine investment entity will invest in 100 companies. That will be too much headache for, right? Anyway, so these are the definition of investment entity. I don't want to go behind it now. I just want to give you overall picture of it. Okay, let's come to the most important part, how consolidation works. Now, any questions so far? Few questions like chain holding. Yes, chain holding I am solving. Please download the notes from the Telegram channel in the description below. Questions I'll be solving. It is an MTP question as well as previous question paper as well as it is in study material. So I will be covering. Some of you are reporting the issues again. Is it fine? Okay, sir, Shreyas Polar, how many questions you'll solve? We are having in the notes. Please go through it. You have the full details. Sir, in the paper, will the theory from consolidation come, combination will come? Yes, it will come. We can't, theory question will not come, but a case study based question will come, like they will be asking the questions like, will there be a exemption for this entity? This is an intermediate parent, should they prepare consolidation? Something like that. Case study based, scenario based theory questions will be there and not such a theory question directly. So will full FR class will be taken? No, this is not full FR class. This is only a revision class. Main intention is for the people who are writing in this July, August. But if you're writing in November also, it's a good revision. It's a good base. You will be able to understand, but you will not get the entire confidence unless you are prepared earlier. It will give you an idea, but not the confidence. Sir, use language in Hindi also. I will try. My Hindi is not good at all. Thoda thoda aata hai. I'm trying to involve little bit. Fine, I'll try. मैं कोशिश करूंगा. I don't know whether that is right or wrong. Anyway, I will try. Okay, let's go into the questions. Okay, last 3 exams have they tested 4 marks from theory? Which chapter to prepare for theory? Okay, there's no specific chapter like that. All Ind AS they will ask theory question, so you need to prepare for Ind AS thing. So go through my charts in the Ind AS, you'll be able to follow it. Some of you are commenting lip movement not matching. Please refresh it once, because some of you are having this issue and for some people it is not fine. Okay, fine. Okay, if you have any lip sync issue or any other issue, please refresh the page. You'll be able to follow it. Pavitra say, yes sir, I understood, but I am asking you that full chapters will handle in the coming days. Yes, I'll be touching upon all the topics. Some topics like consolidation, I'll be solving 3-4 problems, and some topics like Ind AS 1, I will solve 1 problem, and some topics like Ind AS 10, I may not solve any problem. So it's a combination of many things. It's a combination of many things. So I will be touching upon all the topics category A high level, category B level, category C low level. Ind AS 116, Abhay Hyper, Ind AS 116, please take full class with some also, sir. Ind AS 116, I will be doing summary only. If you want the full detail part, I have already uploaded my full 8 sessions, 24-hour sessions is there. All things in detail, Ind AS 116 is discussed and uploaded in the YouTube Advait Learning channel. You can search for it. You get the complete Ind AS 116. Ind AS 117, as of now, there is no notification. So neither for May, June, July, neither nor for November. So you may think about next May, but for these two attempts, coming two attempts, Ind AS 117 definitely not applicable. PDF which you're teaching is very difficult to write while class going on. Anyway, this video will be available, my dear friends, later, so you can take a screenshot of it. That is fine. Or regarding notes, we'll discuss. But as I told you, you can take the screenshot, you can take a picture, or you can get video later. You can take the picture of it. No problem. Of course, I'll be speaking to English only. Hindi, I also can't understand much. But little bit here and there, just to fulfill their thing, I'll do it. Don't worry. Explanation, I cannot do it in Hindi. I cannot do it in Hindi. That's my problem. Okay, fine. Let's go further. Okay, good. Oh, I hope I have. Yes, CA Lakshmi Chaudhary is asking CA fan students. Yes, CMA students also can attend. For you also topic will be same, but syllabus wise you should know what is applicable. But topic concept is applicable for CMA also. Yes. Ind AS 106 applicable? No. Ind AS 106 is not in your syllabus. And Ind AS 116 notes available in my channel. You can download Ind AS 116, 115. Both my full-fledged notes, including the charts, is available in my channel. Irrespective of our statements given, Ind AS should be present balance sheet in Ind AS or unless of financial chapter, specific reference to N19. Yeah, yes, analysis you have to solve as per Ind AS. Analysis you have to solve as per Ind AS. That is definitely true. Yes, you at least this attempt you have to stick to only Ind AS. Okay, good. Let's go into the consolidation part now. Okay, now consolidation, please focus here. This next 15-20 minutes, what we discuss on the structure of consolidation, that will determine whether the next 3-4 hours, today, tomorrow, where you're going to follow it or not. Okay, let's go for it. I will not go into too much of detailed thing because it's a revision part. I will stick to that process only. Now, what is consolidation? To express in simple terms, from the subsidiary company balance sheet, assets and liabilities will replace the investments. Did you get the basic right? Investment in subsidiary is exit. That will be deleted. What will be replaced? Assets and liabilities of subsidiary company. Assets and liabilities of subsidiary company. Now, assets of subsidiary company will straight away come in consolidated balance sheet. 100% PPE. You will have a trade receivable, stock, current liabilities, creditors, borrowings. From the assets of subsidiary, it will come to consolidated balance sheet 100%. Same thing with respect to liabilities as well. Yes, focus here. Focus here. This is where people do mistake. Share capital of subsidiary company, you will divide it into two parts. Subsidiary company is a smaller company. Who are the owners of subsidiary company? One owner is holding company and another owner is the outsiders called as non-controlling interest. So to the extent of the holding company share is one part and outsider share is another part. Now outsider shares, we will take it to non-controlling interest. Outsiders In subsidiary company, what is the share? Not controlled by holding company, because holding company controls. Remaining non-controlling interest, that will go to non-controlling interest calculation. What about the share capital of subsidiary held by holding company? That will go to goodwill calculation. This I need to give one sentence clarity. Okay, you know, in general, how do we calculate goodwill? Goodwill equals the purchase consideration minus net assets taken over. The amount what one person pays versus what you get. When you pay more, it is called as goodwill. Now, purchase consideration in this context, it is investments. The investments by holding company is purchase consideration. Now coming to net assets. Now net assets taken over on which date? Net assets taken over on acquisition. Now net assets on acquisition, there are two elements, two methods. One is asset method, other is liability method. Now asset method, you know, assets minus liabilities is net assets. Other one is share capital plus reserves and surplus, or here we can say other equity, or here we call it as pre-acquisition profits. Okay, so goodwill is difference between purchase consideration and net assets on the date of acquisition, and net assets on date of acquisition comprise of share capital of subsidiary company and the reserves and surplus of subsidiary company called as pre-acquisition profits. Profits as on date of acquisition, reserves on date of acquisition is called as pre-acquisition profits. So when you adjust investment with net assets, means investment with share capital, it will go to goodwill calculation. This is one part. Another part is profits. See, profits as on date of acquisition, I told you pre-acquisition profits. Now pre-acquisition profits will be owned by two people again. One is outsider, which will go to non-controlling interest, and holding company ownership, that will go to goodwill calculation. I told you capital plus reserves and surplus, capital plus pre-acquisition profits. Now when they give you problems in the examination, the balance sheet of subsidiary company will not be on the date of acquisition, it will be on the date of consolidation. So from the date of acquisition till the date of consolidation, there will be some time gap. This profit would be made. So this profit after the date of acquisition is called as post acquisition profits, and in this also outsiders will have a share, will go to non-controlling interest, and holding company share will not go to goodwill. Why? Goodwill is calculated on the date of acquisition, whereas this post acquisition profit is after date of acquisition. It will not go to goodwill, it will be transferred to other equity, and I will call it as con PL. So con PL is, I will there's my name given, but better name is other equity, because con PL means you will say, sir, what about OCI, what about other reserves and surplus? So all revaluation reserves and surplus, all profits, all OCI elements together, I will call it as other equity, or for convenience I will say con PL. So if you observe this, there are methods to prepare, like step 1 date of acquisition, step 2 percentage of acquisition. People follow different steps. I will not follow it. You look at this step, balance sheet anyway you have to prepare. There is no doubt about it. Now apart from that, what else output is there? Non-controlling interest is one, goodwill is another, and then con PL or other equity. So only three things are there. Instead of preparing note 1, note 2, note 3, why don't we prepare it on a columnar basis? That is what I'm going to do now. Okay, so I will give you the notes such a way that the format such a way that I will prepare it in a columnar format. Things will be clear. This I'll come to it in 1 second. Let me give you the format, then I'll come back to this. This is the format. Simple, my dear friends. Please check it out. You start with subsidiary, then you go to holding company. You start with subsidiary, then you go to holding company. Subsidiary company share capital amount. Holding company share will go to goodwill column, and the outsider shares will go to NCI column. Distribution, like the way I explained the chart. Share capital of subsidiary, holding company share goes to goodwill part, and outsider shares will go to NCI part. Pre-acquisition profit, same nature, same treatment. Therefore, these two, pre-acquisition profit share capital is nothing but net assets on the date of acquisition. Both are same treatment. Holding company share goes to goodwill and outsider shares goes to NCI. Now post acquisition profit portion, that should not go to goodwill because that's a profit earned by the group, that will go to ConPL. NCI will get share there anyways. NCI adjustment, I'll come to it. What do you mean by that? Now, coming to holding company, I told you these net assets will replaced by what? Investments. Investment is to be taken out. Taken out means set off. So subtract. Where you subtract? Subtract entirely from goodwill column. Now, holding company will have their own reserves, their own profit, their own OCI. Everything you take it to ConPL. Now you do the total. NCI total will go to consolidated balance sheet. ConPL will go to consolidated balance sheet. Now this total may become positive or may become negative. If it is negative means, why negative? This negative amount is high. Means investment, this investment is high. When investment is high, that means that you paid more. You paid more means what? Goodwill. So very simple. If the total column is negative, goodwill. If total column is positive, it is capital reserve, or you can say gain on bargain purchase. You can say capital reserve or you can say gain on bargain purchase. So simple format. This is the tabular format. I will come to the point of this NC adjustment in 2 minutes from now, but this is the full-fledged format. This format, all adjustments I will discuss, fair value adjustment, dividend adjustment, unrealized profit adjustment, impairment of assets, everything will come in one working note, one sheet, one slide, one page, sufficient to do all workings, all calculations in 10 minutes. Okay, maximum 15 minutes you do working note, 5 minutes you do balance sheet, consolidation is done in 20 minutes. Magical. So if you can get this control and consolidation, if you can pass in examination, 20 marks is in your pockets, rest is a cakewalk. Of course, it's not easy, but if you practice this format, I am telling you, you can pass the exam easily. Many students have told me after the exam, this format made wonders to them. So if you follow this format, you can create a wonder. If not, just wonder what is happening. Anyway, so before we go into the goodwill calculation once more, is the overall structure fine? Please ask for any doubts so far. So Ashmita Shah is asking, sir, can you please give all dividend adjustment on one place in case of consolidation? Yes, I will give all dividend adjustment in one place in my format. How about the format? And don't have any confusions whether institute will accept this format or not. They will accept. It's a very simple format, logically constructed format. People have got marks, don't worry about it. You will get marks. Okay, Mohammad Nishat is asking, sir, please explain holding company part. I'll do it once more. Now, holding company heading. Okay, Morgan, you will selling bonus shares. Yes, that also I'll tell you what adjustment to be done. I'll tell you. Now, coming to the okay, holding company part, I'll explain once more. Holding company balance sheet, I told you separate financial statements. Holding company will have investments that should be eliminated from consolidated financial statements. That elimination I am subtracting. Elimination of investment is happening through subtraction. And where do you subtract? Against net assets. And what is net assets? Share capital and pre-acquisition profits as on date of acquisition. So this is nothing but the PC. This is nothing but the net assets taken over. PC net assets net amount is goodwill. One column you got the goodwill. No need to prepare multiple parts. No need to prepare multiple working notes. One column net assets, one column, in the column, one line net assets, one line investment, net effect, goodwill. You will get all the answers. Shanti Arvind Kumar, can you repeat this again, sir? Can you tell me which part? Because repeating again in a revision classes might be time consuming. So you can tell what part you need to have a doubt. I will address that. Shivam Reddy is saying, sir, where does gain on bargain purchase appear? It is the capital reserve. So when you prepare in the balance sheet, this con PL and this gain on bargain together you report as our equity in the balance sheet. For example, if con PL is 5,000 and if gain on bargain purchase 1,000, on the balance sheet reserves and surplus other equity you will write 6,000. So some of these two numbers will come in the balance sheet. Okay, I hope no other doubts. Now let me come to goodwill calculation once more. Okay, now before I go to goodwill calculation, I will ask one specific question. I want you to answer it. Okay, now subsidiary company will have assets like PP and they will have liabilities like maybe let's say share capital, reserves and surplus, etc. Now, and holding company also will have assets like PP, and then we prepare consolidated financial statements. Holding plus subsidiary equals to consolidated financial statements. Okay. Now, subsidiary company, let's say, has PP 100. Now, holding company has got 80% of subsidiary company's assets. Now, how much should come in consolidated financial statements? Shreyas, sir, possible? Can you please explain with an example? I will solve full-fledged problems, but I can't solve every one problem with the format. Then entire 24 hours I'll be spending on consolidation only. So that's what I'll be doing. I'll discuss all the adjustments, then I'll go for problem. It's a revision session. Now, from the PP to balance sheet, should 100 will come or 80 should come? Can you please note it down? 100 or 80? I mean, can you please comment it? 100 or 80? 100, yeah. All of you are telling 100. Yes, perfect. Okay, now, why 100? Because the holding company controls 100, but you own 80 only. You are showing assets 100, but you don't control it. You don't own it. What do you call? That is what is called as NCI. So what you're not controlling, you show it as non-controlling interest as NCI. Okay, now that is clear. Everybody is sure 100 will come. Now, please look at in this format and please tell me this goodwill in the column, what we calculated, this column goodwill or in your any understanding goodwill, is this goodwill only related to holding company share or related to entire subsidiary company? Please again, please give a comment. I'll repeat the question. Goodwill calculated just now, is it only related to holding company share or is it entire subsidiary company goodwill? Goodwill be calculated is only holding company share or is it entire holding subsidiary company goodwill? Only holding company share, right? So Saran is answering, Ragul is answering, yes, only holding company. Now there is a conflict, right? Assets and liabilities we take 100%, goodwill we don't show 100%, we do proportionately, small sort of conflict. That is why the Ind AS 110 is giving you the option. You can show proportionate method or you can show fair value method. There is an option. But under AS 21, old syllabus students, you only have to follow proportionate method, whereas in case of Ind AS 110, actually not 110, Ind AS 103 will tell you you can follow proportionate method or you can follow fair value method. Proportionate method means goodwill in this example only reflects 80%. Fair value method means it reflects entire 100%. So what is the basic formula of goodwill? A purchase consideration minus net assets. So what is purchase consideration here? Cost of investments. In fair value method also I'll take, but that is only related to PC of holding company. What about other PC, what holding company is not purchasing? That is called as NCI. NCI, in proportionate method we take the percentage of assets taken over, whereas in fair value method we take NCA on fair value basis. What do we subtract? Net assets taken over, and then fair value method also net assets taken over. Okay, so overall format is same. What is difference between proportionate method and fair value method? In proportionate method we take net identifiable assets taken over, whereas in here we take it on fair value basis. Okay, for example, if net assets taken over is, let's say, 60 crores and these people percentage is 20%. So how much you take it here? 12. And fair value, if it is 13, that you take it here. You understood? You are getting the point, my dear friends. The calculation of goodwill is same under proportionate method and fair value method. In proportionate method, NCI is taken as a percentage of NCI is taken as a percentage of net assets, whereas in fair value method NCI is valued on fair value basis. So the difference in goodwill arises because of difference in NCI treatment. Shall I repeat? Difference in goodwill will arise. Why difference in the goodwill is arising? Because of difference in NCI treatment. So going back to my format again once more, this, if NCI is having, let's say, the proportionate amount of 12 crores and fair value of 13. Remember, on date of acquisition, what is the difference? Difference is 1. So this 1 I need to add in NCI and subtract in goodwill column, because NCI change and goodwill change. Hence fair value is high. So when the fair value is high, it is added in NCI column, subtracted in goodwill column. If NCI is less, then it is fair value is less, then subtract in NCI column and add in goodwill column. Okay, so simple thing, my dear friends. NCI adjustment also will be doing problem, so don't worry. In case of fair value method, compare fair value of NCI and proportionate NCI. If fair value of NCI is high, the difference amount you add in NCI column, subtract in goodwill column. If fair value of NCI is less, then subtract in NCI column, add in goodwill column. This is taken care. Okay, so hope you got this point, my dear friends. Any questions on this NCI adjustment so far before we go to other aspects? Okay, Rangesh Badri is asking, sir, last point alone repeat. I'll repeat. Last point. If goodwill is valued under fair value method, compare fair value of NCI and proportionate NCI on the date of acquisition. If fair value of NCI is more, then do plus in NCI column minus in goodwill column and vice versa. If fair value is more, add in NCI column, subtract in goodwill column. Sir, could you please say logic behind adding and subtracting in case of NCI adjustment? I'll tell you. Once again. Now, since this last column is already having proportionate amount, so I'm taking share capital one portion, pre-acquisition profit one portion. So this is already proportionate method, and if proportion is 12, if fair value is 13, then one extra should come. So NCI I will add. And NCI I'm adding means what will happen to goodwill? Goodwill also should increase. Both should increase. If NCI is increasing, goodwill also increasing. But in our case, goodwill is minus column because investment we are subtracting. Therefore, it is minus here. That is the logic. If you have proportionate method, then this line will not come. If it is proportionate method, even for AS21 people, this line don't come. No fair value method in the question, then again proportionate method only. Fair value will not come. Okay, very good. AJ is asking how to choose the method. They will give it in the question. If not, go for proportionate method, simplest method. NCA adjustment will not come. But if they give you NCA fair value, you should go for it. All depends on information on fair value of NCI. All depends on information on fair value of NCI. Okay, let's go further. Other adjustments now. Now one more adjustment you have is revaluation profit. Revaluation profit is on the date of acquisition. Revaluation profit is on the date of acquisition. Okay, before that, one more question is coming. Kaushika Dhanuka, just confirming, sir. If NCA is valued on proportionate net assets, then no need of this adjustment. Yes, you are right. Con-PL column not understood. Con-PL column is element related to post-acquisition profits. All post-acquisition adjustments will come in Con-PL column related to holding company share. So for old syllabus, guys, NCA adjustment won't come. Yes, you are right. For old syllabus, NCA adjustment won't come. Consolidation we are doing as per AS21. Yes, as per AS21, this NCA adjustment will not come. Rest everything is same. Okay, good. Let's go to revaluation profit. You know, on the date of acquisition, the subsidiary company's assets will be taken over at fair value method. It will be taken over at fair value method. In their books, they will not do revaluation. But in the taking over, in the group books, the revaluation to be done. That is this revaluation profit. So revaluation profit is the revaluation surplus or revaluation of assets of subsidiary on the date of acquisition. Revaluation profit on the date of acquisition. Since it is on the date of acquisition, this is nothing but pre-acquisition profit. Since it is on the date of acquisition, it is nothing but pre-acquisition profit. Okay, now since it's pre-acquisition profit, holding company share goes to goodwill, outsider shares will go to NCI, same treatment. Now, revaluation profit, you have to consider depreciation. I'll give an example of depreciation. Let me tell you the logic. Now, when asset value increase, you will provide more depreciation also. As the asset increases, you have to charge more depreciation. But when will you charge depreciation? Depreciation will be charged after revaluation. So, revaluation is done on the date of acquisition, whereas depreciation is done after date of acquisition. And after date of acquisition means it is post acquisition profit. Post acquisition profit, and post acquisition profit means holding company share goes to Con-PL and outsider shares will go to NCI. And why I'm subtracting? Because revaluation profits means Depreciation will be an expense, and depreciation expense means we will be subtracting it. And if revaluation loss, no problem, depreciation will be positive number. So revaluation profit is plus, depreciation is minus. Revaluation loss, depreciation plus. Revaluation is pre-acquisition, depreciation is post-acquisition. Okay, now unrealized profit. Again, I will not go into too much detail, a quick summary only. So holding company selling it to subsidiary, or subsidiary company selling it to holding company, or subsidiary to subsidiary. That means the sale is happening within the group, it is not sold outside the group. When the sale is happening within the group, it is considering if group as one, I am selling it to myself. Subsidiary holding, part of the group. So it is selling it to myself, and selling it to myself, I can't make profits. So profit need to be eliminated. That's what I'm calling it as URP, unrealized profits. But remember, I only talk about closing stock. That is subsidiary sold to holding, and holding company still unsold. Holding company closing stock. If holding company sold to outsiders, it is realized profit. Realized profit don't come here. So sale transaction within the group and unsold is called as unrealized profit. Two things can happen: sale by holding to subsidiary or subsidiary to holding. Now, who should eliminate the profit? In case of sale, or in case of the sale and purchase, who makes the profit? Always seller makes the profit. So if the seller is subsidiary company should take out its profits. If the seller is holding company should take out its profits. So I am writing, if the seller is subsidiary, I write under subsidiary. If the seller is holding company, I write under holding company. Listen to me carefully once more. Listen to me carefully once more. Seller should eliminate profits. If whoever is the seller, under them write the amount. You have to subtract. Now, which column it should come? When it is profits of subsidiary, who are the owners of subsidiary? Owners of subsidiary. Subsidiary's owners are one, outsiders NCI, and another, holding company. So if subsidiary company profits to be eliminated, its owner should take the share of it. Therefore, the holding company share will be subtracted in CONPL here, and outsider share will subtract NCI. Why? Because they are the owners. They have to take the loss. If subsidiary company profits comes down, the holding company share will come, outsider share also will come. Whereas if the sale is done by holding company profit should come down, which means only holding company shares. Subsidiary company will not come here, NCA will not come here. Therefore, you have to subtract only in CONPL column. Simply summary. If subsidiary company is selling, subtract in CONPL, subtract in NCI. If holding company is selling, subtract only in CONPL, matter over. One more adjustments will come, that will come in the balance sheet. From the stock we reduce, double entry effects. But otherwise, this is the format. One more, I'll come to it now, my dear friends. Impairment of goodwill. Impairment of goodwill. First of all, which column it should come? Goodwill column. Impairment of goodwill, it should come in goodwill column. Now, goodwill column, it should come means, should it come as a positive number or negative number? Please observe, we are accounting for goodwill in negative column, negative goodwill, because when the total column is negative, then is goodwill. We are interpreting like that. So if that number has to reduce, negative number has to come down, then what should happen? It has to be a plus number. Like if this is minus 30,000, impairment of 5,000 means I will be doing plus 5,000. So what will happen? Then goodwill come to 25,000. So impairment loss of goodwill will be added in goodwill column. Then where is the other effect? Double entry effect. It will go to CONPL. Because why? Impairment of goodwill is transferred to CONPL. Impairment of goodwill is transferred to CONPL. Okay, but there is one small catch here, my dear friends, one small catch. That is, if it is proportionate method, if it is proportionate method under AS21 also, this statement is right. Impairment of goodwill, you subtract in ConPL, write off, and you take it into the goodwill column. That is fine. But listen to me carefully. Listen to me carefully. If goodwill is measured under fair value method, if goodwill is measured under fair value method, we have computed goodwill relating to holding company share as well as NCI share. Goodwill under fair value method means goodwill related to holding company share as well as NCI share. So if I am writing it off, it should go to holding company portion as well as NCI portion. Therefore, when goodwill is valued under fair value method, impairment is done means you have to subtract in ConPL to the extent of holding company share, you have to subtract in NCI to the extent of NCI share. Very simple. One small revision. Goodwill under proportionate method minus in ConPL plus in goodwill. Impairment of goodwill under fair value method, you do plus in goodwill and minus in two columns, holding company share minus in ConPL and outsider share minus in NCI, because goodwill means goodwill under fair value method means related to both kind of people. Impairment also should go to both the columns. So this is your overall adjustments related to revaluation profit, depreciation, unrealized profit, impairment of goodwill. Everything what you can think of is in one place. Okay, any doubts so far? I will discuss dividend, I will discuss bonus shares, then only we go to other problems. Don't worry. Any questions so far? Hope you're enjoying, my dear friends. Hope you're learning something new. Hope you're getting some confidence in consolidation. Deferred tax also should be adjusted to both NCA consolidation. Deferred tax is an asset, my dear friends. I'm talking about share capital reserves. Don't worry about stock, debtors, deferred tax. No worry about it. But deferred tax impact should be considered. I agree. Deferred tax impact is also pre-acquisition profit on the date of acquisition. Yes, that I agree. Okay, yes sir, enjoying sir, yes sir, good, confidence, very nice explanation. Okay, Naveen Satya says, sir, unrealized profit sale by holding company amount will come in total column. Yeah, total column does not matter, right? That is not at all important. That is only a reference. Total column is only a reference. Total column is not going to play any role at all. That you ignore it. But its treatment, one treatment will come in the balance sheet, other treatment will come in here depending on who is the seller. Shreyas says, in case of impairment of goodwill, will it be reduced? Then why will add goodwill in goodwill? Okay. See, I'm double entry, right? What is journal entry for impairment? Journal entry for impairment is P&L account debit to goodwill. So P&L is subtracted and goodwill also subtracted. In our column, goodwill should be subtracted means it has to be positive number, because goodwill in our column is negative number. So I'm reducing, or investments is there, negative number, I'm reducing means I have to do a plus number, so that will take care. Impairment as per AS21, impairment as per AS21 and proportionate method, two simple thing: subtract in ConPL, add in goodwill as per AS21, and proportionate method, subtract in ConPL, add in goodwill. If it is fair value method, add in goodwill, subtract in ConPL, subtract in NCI. That's all. Okay, hopefully we got the points. Okay, Dividend, I'll come to it. Mansi, I'll come to it. Don't worry. Dividend, I'll explain. Bonus shares, I'll explain. Investment in like preference shares, debentures, I'll explain. Multiple acquisition, disposal, everything we'll consider. Don't worry about it. Will come. Dividend will come. Don't worry. Okay, let's go further then. Okay, let's go to the most favored adjustment, that is dividend part now. Now, dividends, there are three possibilities. Dividend or three process. Dividend proposed in board meeting, dividend declared, and dividend paid. Okay, now dividend proposed and dividend declared, you don't have to worry about any adjustments, because as per Ind AS 10, as per AS 4, they are non-adjusting events, so you can ignore. They will tell you in the problem, both companies have declared dividend, both companies have proposed dividend for the year ended so and so. So if it is a proposed dividend or dividend declared, ignore it. Very, very simple, ignore it. Now question comes, how do we treat this dividend paid? How do we treat this dividend paid? And there is one question that, just give me 1 second, my dear friends. Okay, I just want to make sure that things are clear now. Okay, dividend, there are discussions about pre-acquisition dividends, post-acquisition dividends, dividend paid out of pre-acquisition profits, dividend out of post-acquisition profits. I will tell you one simple thing, ignore it. Old syllabus and new syllabus, ignore it. I will tell you how it will be a given effect without even considering it. So whether the dividend is out of pre-acquisition dividend or post-acquisition dividend, ignore it. Okay, now before we go to the calculation, one simple thing you need to understand, when subsidiary company pay dividends, what will happen to group position? Okay, let's say if they pay dividend of 1 lakh, if they pay dividend of 1 lakh, what will happen to group position? And holding company share, let's say 80%. So group profits will come down by 1 lakh, will come down by 80,000, will come down by 20,000. Come on, answer it. Subsidiary company paying dividend, subsidiary company paying dividend of 1 lakh, where holding company has 80% share, what will happen to group position after the dividend is paid? Profits of the group profits will come down by 1 lakh, or will come down only by 80,000, or will come down by 20,000. Please answer it, my dear friends. Let's see what you can think of. Shivaram Reddy sir, when and why impairment of goodwill? We'll discuss in impairment. In days 36 we'll discuss. 20,000, 20,000. Okay. So most of you are telling 20,000. You are right. Why 20,000? Not 1 lakh, not 80,000. Because a subsidiary company will pay 1 lakh. So subsidiary company will reduce by 1 lakh. But holding company will receive 80,000. You understand? Subsidiary company pay 1 lakh. Pay 1 lakh means minus 1 lakh. but holding company will receive 80,000. So in the group, one person is paying 1 lakh, other person is receiving 80,000. What is the net effect? 20,000. So you understand that when dividend is paid by the subsidiary company, the group will suffer loss to the extent of the NCI share, or the group bank balance will go down, NCI share also will go down. Why NCI share will go down? NCI is like a liability for the group. We have to pay to them. So when we pay them, the cash balance will come down and NCI share will come down. So the overall net effect remains same. Now, one more point. So we learned that in case of post acquisition profits, when we talk about post acquisition profit, we had 3 columns like goodwill column, con PL column, NCI column. Post acquisition profit, let's say 1 lakh, we will take a holding company share to con PL 80,000, NCI share 20,000. Now when we prepare the holding company P&L account, they will receive dividend. Correct? Holding company will receive dividend and they will take that to 80,000. Now this 80,000 is recorded 2 times. Duplication, right? As an accrual basis, holding company is taking subsidiary company profits. And when you receive dividend, again you take it to P&L account. 2 times you're taking, not right. That is a duplication. You can't take it to con PL as post acquisition profit. Again, you can't take it as dividend. Duplication. This has to be subtracted. Okay. Now, in summary, one second. Yeah, in summary, what should you do? I'll explain this. Please listen carefully. Dividend paid is the only adjustment you need to worry about. One, whatever dividend paid, add it to the P&L account and then subtract holding company share in con PL column and NCI share in NCI column. Okay, let me give an example. Fine. Date of acquisition 1/4/2017. Fine. P&L as on that date was 1 lakh. Then year end P&L became 1,20,000. So what is the post acquisition profit, my dear friends? 20,000. And dividend paid during the year is, let's say, 10,000. So what you should do, my dear friends? In fact, in this case, can you tell me what is post acquisition profits in this example? Dividend paid in the year 17/18. Beginning was 1 lakh. Year end 1,20,000. During the year, dividend paid 10,000. Can you tell me what is the 17/18 profits? What is 17/18 profits? 30,000, 20,000, 30,000. Okay. Some are answering. Okay. The answer is 30,000. Why? Because even after paying this 20,000, even after paying 10,000, we have seen increase of 1,20,000. 1 lakh became 1,20,000. So increase 20. But in that process, we had paid 10 also. So both of us our profits. So totally 30,000. Okay. This is on one side. What I'm trying to tell you, treatment wise, please observe. Pre-acquisition profit in this example, or what you do is, analysis will go like this. P&L 1,20,000. That is given, plus dividend paid 10,000. 1,30,000. And opening balance dividend is 1 lakh. profits, and current year profit is 30,000. Don't worry about pre-acquisition, post-acquisition, source of profits, when it is paid, out of what is paid. Don't break your head. Dividend paid, simple adjustment. What adjustment? Whatever the P&L, add dividend. Opening balance, balancing is current year profits. Now, dividend payment will happen. What adjustment you are going to do related to this 10,000? One portion, 80, let's say 80% is the holding company share. In ConPL, you subtract 8,000, and in NCI, you subtract 2,000. That's all. So what's the treatment? Let me summarize. Dividend proposed, dividend declared, ignore. Any proposal is a non-adjusting event in your life till you pass exams. Any proposal, dividend proposed, dividend ignore, dividend declared, ignore, non-adjusting event. Dividend paid, first adjustment, in the P&L you add to the closing balance. Opening balance you get, balancing figure is current year profits. Holding company share, subtract in ConPL column. NCI share, you subtract in NCI column. Don't worry about this recovery of investment and all, not required. I'll just take it out. I'll make it simple. Okay. Okay, so dividend adjustment is that, my dear friends. You have to add in P&L, then you analyze into pre and post. Holding company share, subtract in ConPL. Outsider share, subtract in NCI. Matter over. No worry about pre-acquisition dividend. No worry about post-acquisition dividend. No worry about what is the source of acquisition, source of dividend, when it is a profit is made, when it is paid. Don't worry. Dividend paid, add back. Subtract holding company share in ConPL, subtract outsider share in NCI. That's all. Okay, so now similarly bonus shares. Bonus shares, no adjustments required. You can ignore it. Only thing to be you should be careful about the percentage of acquisition. Okay, and bonus shares you should do like dividends only. But one point is, you add back dividend because there is an outflow of dividend. But bonus shares, there is no outflow only. What will you add? So only one point to be kept in mind is, in the share capital, in our format is there no share capital, you should take the share capital on the date of acquisition before bonus. That's all. And pre-acquisition profit should also be on the date of acquisition before bonus. So otherwise, bonus has no impact as such. I repeat, for bonus, while bonus, no need to adjust for any cash because there is no cash payment at all. And regarding the profits and share capital you take on the date of acquisition before bonus, and pre-acquisition profit also you take on the date of acquisition before bonus. Everything is set right. Okay, any doubts so far? Okay, let me do one thing. Okay, yeah, any doubt in the dividend portion, because many people had the dividend confusion? Right shares, no specific adjustments. Right shares comes and you go for it, will not have any impact on our consolidation. Right shares has no impact on consolidation. Okay, good. Let's go for next. Investment in debentures, investment in preference shares. Now, how investment in debentures and investment in equity shares is different. Equity shares holders are owners of the company. Like, but debenture preference shareholders are not owners in general. Exceptions are there, we'll come to it later. So investment, once again, Naveen Satya Singh, regarding dividend paid, we have to add which profits? Dividend paid. That's all. Whatever the dividend paid, in my example 10,000, you add to the P&L account. You are reversing the effect. That's all. Bonus share, once again explain, bonus shares no treatment. In our working note, in the share capital, you take share capital on the date of acquisition and pre-acquisition profit on the date of acquisition. So no adjustments as such. That's it. Is it okay to take 20 and leave adjustment? In some cases you can, Shivaram Reddy, some case your answer is right, some case your answer is wrong. So it depends on various cases, but best thing is add and then subtract. Simple. Bonus share, again explaining. Bonus share no treatment, my dear friends. Treatment is, okay, I'll give an example. Some people are having that apprehension about bonus shares. Let me give. Suppose share capital on 1/4/2017, I'm talking about subsidiary company, share capital is 1 lakh and let's say reserves and surplus is 2 lakh, and they have given bonus of let's say 30,000, and this will be minus 30,000, right? And on 31st March 2017 they will have share capital of 1,30,000 and reserves and surplus of 1,70,000. But what do? Don't consider all these things. Share capital on the date of acquisition, you take it in our calculation. Reserves and surplus on the date of acquisition, you take it our calculation. See, total remain 3 lakh only, no, does not matter. So bonus shares, ideally taking out from share capital, taking out from reserves and putting it to share capital. So it makes no difference on net assets. So bonus shares, don't worry. Reserves and surplus on the date of acquisition you take, share capital on the date of acquisition you take, as simple as that. Okay, let's go for investments in debentures and preference shares. Okay, now the main difference between equity shares and debentures and preference shares is equity shareholders are owners of the company, so goodwill is created, whereas debentures and preference shares, goodwill will not be created. So let me take an example of debentures. Let's say holding company has investment in debentures, okay, 80,000, and subsidiary company has debentures of let's say this is 1,02,000, and debentures will show at face value 1 lakh. Now when you do a consolidation, what will happen? Liability 1 lakh and asset 1,02,000 will get set off, and you will have a loss of 2,000. Why loss of 2,000? Because for a face value of 1 lakh, you have paid 1,02,000, you paid more, it's a loss. So what should you do? This loss, you will take it to Con-PL. So in the Con-PL, you write the negative number, that's all, no other thing. Difference between face value and cost of investments by holding company and subsidiary company, difference you find out, subtract in Con-PL. If investment is more, same for preference shares, same for debentures. But if it is preference shares in the nature of equity, then don't take it to Con-PL, take it to goodwill, because you know financial instruments, preference shares can also be classified as equity. But in general, preference shares are in the nature of debt. Therefore, difference between the face value of investments, face value and investments of preference shares, take it to Con-PL. If investment is high, subtract since it is a loss. Proportionate method is applicable to new syllabus. Yes, Manjay Tiwari, yes, it is applicable. Both are applicable. You have a choice, and the questions will give you choice. Companies have a choice, but in the question they will tell you which method to follow. If not, you can go for proportionate method. Okay, so what adjustments will come in a working note? Just as a clarification, dividend paid, I told you, you need to subtract related to holding company share in holding CONPL column, and outside share NCI dividend paid, and then debentures face value, difference between face value and investment. You can do this formula, face value minus investment, whatever difference you can take it to the CONPL. So every damn adjustment is taken in one place, one working note, you are comfortable, consolidation headache is done. But conceptually be very clear, no other shortcuts, because all the shortcuts are subject to conceptual risk. Please understand all the concepts before applying in examination. If some shortcuts goes wrong, I'm not responsible. I'm teaching you concepts also, I'm teaching you shortcut also. Okay, my dear friends, any other doubts before we go further? I think we have discussed all possible adjustments except for chain holding, acquisitions and sale, disposal. Apart from that, we have discussed everything. Is the debenture gain or loss unrealized? Yes, it is unrealized because it's not set off. It's only for the purpose of reporting we are doing. So it is unrealized loss, unrealized gain. Okay, somebody wanted the dividend chart alone. I'll show it to you. Yeah, simple dividend. Anyway, I'll be doing problems. You'll get more clarity. You can take screenshot of this. No problem. Okay, nice. Good. Okay. Dividend adjustment holding company, no adjustment. Dividend paid, dividend by holding company, no adjustment. Only by dividend by subsidiary company requires adjustments. Preferential debenture once more, I'll do it, no problem. Investment in debentures, investment in preference shares, compare face value and investments. Or simple formula I'll tell you, face value minus investments held by holding in subsidiary. Face value minus investments, take it to CONPL. If it is negative number, subtract in CONPL. Positive number, take positive number to CONPL. Very simple. Difference between face value minus investments. It's like a set off. It's like a cancellation. What if dividend paid for pre-acquisition shares? No concept of pre-acquisition, post-acquisition. Don't worry about it. And whatever thing you're thinking, you will take care. The method I told you will take care of those pre-acquisition adjustments also automatically. You don't have to worry at all. The dividend chart there. Dividend chart is there. Yeah, dividend chart is there. You can take it down. Priya sir, multi-stage acquisition, I'll come to it. Multi-stage chain holding, disposal. I'll discuss all the three, don't worry. I'll be doing problems also maybe on acquisition. Yeah, I'll be solving problem also. Okay, good. Okay, working note is also done. Before we go to this one, we'll prepare one balance sheet. Because we know ultimately it should come in two places. The working note we have learned, and ultimately how to prepare consolidated balance sheet. With all these adjustments what we discussed, we'll prepare one format for consolidated balance sheet also, so you know all possible adjustments in one place. So one working note format, one consolidated balance sheet format, your 20 marks in your pockets. Okay, let's go for the adjustments. Rangesh Bhai sir, chart for preference share debenture. No, don't worry. That I have discussed quite a few things. Very simple difference between preference share face value investments. Take it to ConPL. One line you remember sufficient. Difference between face value and investments relating debenture. Take it to ConPL. If it is in the nature of equity, preferential, you take it to goodwill, but that will not happen in exam, don't worry. So difference between face value and cost of investments, take it to con PL. One line adjustment sufficient. Okay, now balance sheet, holding company values will come, subsidiary company values will come, revaluation profit, remember pre-acquisition profit will be added, depreciation will be subtracted. Intangible goodwill will come from working notes. Then if there are any other investments is there, those are investments holding company, subsidiary company will come, but investment in subsidiary, maybe in equity share, maybe in debentures, maybe in preference shares, will not come. Why? Because that is the process of consolidation. Process of consolidation means taking out the investments and replace with net assets. So investment by holding company in subsidiary cannot come in balance sheet. Inventories holding company plus subsidiary company minus unrealized profit, whichever the sales by holding or subsidiary. Unrealized profit means stock should be reduced. Debtors holding company subsidiary minus mutual owings. Mutual owings will be there. Holding company has to pay to subsidiary or subsidiary company has to pay to holding. Both cases we have to subtract. Cash and cash account will come. Equity share capital only holding company. Other equity working note, that is con PL column. Other equity column. Non-controlling interest, last column. The financial liabilities, debentures holding plus subsidiary. Current liabilities holding plus subsidiary. This mutual owings, whatever you subtract will be subtracted from liability also. Mutual owings holding company has to pay to subsidiary, means subsidiary has to receive from holding or vice versa. So when you set off in a group, the receivable will come down, payable also will come down. So you subtract in liabilities, current liabilities, as well as you subtract in current assets. Okay. Fine. Any other question, my dear friends? Because now I'm going for full-fledged problem, a previous question paper only. Any questions? So that once we start now, we have to finish that problem. Any questions, my dear friends, so far? Any adjustment? What you need only two things, two Brahmastra. One Brahmastra is relating to working note format, other Brahmastra is format of balance sheet. That's all. 2 pages sufficient. Keep reading these 2 pages every day. Consolidation is in your pocket. If any Mansi Datar is asking if any abnormal gain or loss is there, that will be considered while doing pre-acquisition, post-acquisition. Apart from that, it has no other impact. No impact on our working note. While computing the pre-post classification, we'll adjust for abnormal gains or losses. So please share the PDF of board notes. My chart, my regular notes will have all these charts. Otherwise, you can take a screenshot because converting it to PDF and sharing is not recommended. Questions I've shared in the notes already. Maybe important graph I'll share it in my WhatsApp, my Telegram channel. My important charts I will share it. Last item of balance sheet is liabilities. That is, I'll just show it to you. Trade payables. That's all. Last line is trade payables. Okay, fine. Okay, I believe you are ready for full-fledged question. Let us go for it. My regular notes, Danish Ahmad, is available in my office. You can contact my office. I'll share the number in my my Telegram channel. Office people, you can contact. I'll share the number and contact details if you want to buy. No problem. Okay, let's go for full-fledged prompts now. Hope you have the questions, my dear friends. I repeat, you need to have the question with you. So if you have not downloaded, please download from my Telegram channel notes. Description is available, because you need to keep the notes ready. You need to have the questions ready. In my opinion, what problem I'm solving now, one of them will come. I'm solving two problems, full-fledged. One, this which contains many adjustments, and another is chain holding problem, which is part of latest MTP also. So I think one of the question will come, is almost certain. Okay, fine. Question number 1. Holding Company Limited acquired 100% ordinary shares of ₹100 each of Subsidiary Limited on 1st October 2017. On 31st March 2018, the summarized balance sheets of the two companies are given below. Okay, so acquisition happened on 1st October 2017. Acquisition happened on 1st October, means middle of the year. So whatever the profits made by subsidiary company for the year, one portion will become post and one portion becomes pre, because acquisition happened at the middle of the year. The retained earnings of subsidiary company showed a credit balance of 6 lakh on 1st of April 2017, out of which a dividend of 10% was paid on 1st November 2017. Dividend paid, out of which, don't worry, source does not matter. Dividend paid, we will do adjustments, don't worry. Holding Limited has credited the dividend received to retained earnings account. There was no fresh addition to fresh reserves in case of both companies during current financial year. No fresh addition, meaning whatever the opening balance in reserves, other reserves, is closing balance also. There was no opening balance in the retained earnings in the books of Holding Limited. Following are the changes in the fair value as per respective Ind AS from the book value as on 1st October 2017 in the books of Sub Limited, which is to be considered while consolidating the balance sheets. Fair value of plant and machinery was 40 lakh, rate of depreciation machinery 10% per annum. Land and building appreciated by 20 lakh, inventory increased by 3 lakh, trade payable increased by 2 lakh. Prepare consolidated balance sheet as on 31st of March 2018 under Ind AS 110. Okay, so this all points related to fair value adjustments, or I will say like a revaluation profit. And all these things is done on the date of acquisition, and date of acquisition is 1st October 2017. So let's do this fair value adjustments now. Later we'll go to other things. One advantage with this problem is 100% holding. So NCI will column will not come, but anyway, no problem. So plant and machinery or any revaluation, you please follow this format. Simple format, beautiful format, logical format, and a foolproof method. You follow this, you get the answer. What is the year beginning? 1/4/2017. Then you have to charge depreciation for 6 months. Why? Because date of acquisition is on 1st of October. That will give you the WDV as on 110. Why this is required? Because this WDV, I should compare it with the fair value, and difference is your revaluation profit. And then subsequently post acquisition profit depreciation will come. So depreciation from 1st of October till 31st of March, what will be the closing WDV? So this amount minus depreciation and this WDV minus depreciation will come to the net amount, and this net amount is available in the problem. Anyway, just write down till here. We'll fill it up after this. Please write down. Ajay Chandra, it seems solutions are not there. No, sir, solutions will not be there in the questions. No, that is what you come to class for. Maybe in the next attempt, I'll give you solution also, but as of now, you'll get only questions. Solutions are done in the class. Okay. Now, let us go to the question once more. See, my dear friends, they have given fair value of the machinery 40 lakh. This is the fair value. But what is its book value? Then only we can get revaluation profit. No information about book value. When no information is given about book value, what do? You assume there were no purchases, there were no sales during the year. So whatever is the assets that were held at the beginning of the year by subsidiary company is also there at the year end, because no information. So since no information about the book value, we assume there were no purchases, there were no sales by subsidiary during the current year. Okay, what is the opening book value? That also not given. What is closing book value? You can get from the balance sheet. Look at the balance sheet. Subsidiary company asset side, land and building, plant and machinery 27 lakh. Closing balance, right? Closing balance 27 lakh. But we need WDV on 1st of October. So what do? I'll take help of rate of depreciation. So if I assume 100 rupees, what is the rate of depreciation they have given? 10%. 10%. So on 100, 10% for 6 months. April to September, 6 months means 5. Remaining is 95. Then again remaining 6 months depreciation also 5, 90. Or you can say like 100 minus 10%, 90%. Okay. Now observe, 27 lakh is after depreciation. How much is at the beginning of the year? Cross multiplication. 27 lakh into 100 divided by 90. That will give you 30 lakhs. So 30 lakhs is the opening balance. Depreciation for the year 1,50,000. That is 30 lakh into 10% into 6 by 12, 6 months. Or you can do 30 lakh into 5% directly. 28,50,000 was the WDV as on the 1st of October, on which date the assets were taken over, and it is revalued at 40 lakh. So revaluation profit fair value adjustment is 11,50,000. So please write down till here, and if you have any doubts, please you can ask. Okay, so hope you have got this one, revaluation profit. Now come to depreciation. Now depreciation, don't worry about the period which is over. You should look post acquisition, means what is the depreciation already charged by subsidiary company, what needs to be charged on the revalued amount by the group, the differential, additional, incremental depreciation. Okay, now what is the difference on this one more? Don't compute on 28,50,000. You should compute on 30 lakh only, 10% 6 months, so 1,50,000. And on 40 lakh, if I apply 10% 6 months, I get 2 lakh. So incremental depreciation is 50,000. So 11,50,000 is pre-acquisition profits. 50,000 is post-acquisition profit. 11,50,000 is going to be plus Revaluation profit 50,000 is going to be minus, which is an expense. For this depreciation, if you want to do one shortcut, for depreciation, what do? You take the revalued amount and you take the opening balance value multiplied by the rate of depreciation. So revalued amount is 40 lakh, opening balance is 30 lakh into 10% for 6 months. You will get 50,000. So if you want a shortcut for depreciation, you can follow this. Okay, shall we move ahead, my dear friends? Is this adjustment done? Is the shortcut also understood? Shall we go to next slide? Okay. Okay, now apart from this fair value adjustment, other things were also there. So let us consider that. Plant and machinery, 11,50,000, which we have taken now. And others, they only given in the question. Land and building revalued by 2 lakh. Inventory, 3 lakh. Trade payables, 2 lakh. So net effect, 32 lakh 40,000. You can do one by one also. I am just doing it at one shot. You can take down this also. 11,50,000 we just computed. 20 lakh given in the problem. Inventory increased given. Trade payable increased given. Trade payable increase means liability increase. And liability increase means profit will reduce. So do a minus number. Okay, let's go further now. Regular working note, consolidation, particulars amount, goodwill calculation, CONPL. You can also remember it as other equity, NCI. And percentage wise, 100% holding company share, 100% holding company share. NCI nothing is there, 0%. As a format, I'm writing it. Start from subsidiary company, share capital. What is subsidiary company share capital? 40 lakh. So 40 lakh is the amount. $40 lakh is the amount. Holding company share goes to goodwill. No NCI, 0, blank. Okay, then about the reserves, what reserves they have given? They have given other reserves of 20 lakh and retained earnings of 16 lakh 20,000. Other reserves of 20 lakh and retained earnings of 16 lakh 40,000. What information is there regarding Other reserves and retained earnings. Other reserves, there were no fresh addition, meaning this other reserves is opening balance also. Opening balance also. Once again. Yeah. So other reserves was there at the opening balance also. So 20 lakh we can take it as it is. No addition. And entire 20 lakh is opening balance. No fresh additions. No fresh additions. That's why. No fresh additions. Now coming to retained earnings. How much is in the balance sheet retained earnings? Retained earnings balance sheet 16 lakh 40,000. 16 lakh 40,000. I told you on adjustments, my dear friends, regarding dividend paid. What is that? Irrespective of when the dividend is paid, out of whichever source it may be paid, add to the closing balance. So what is the dividend amount? 10%. 10% of what? 10% of capital of 40 lakh. That means 4 lakh. Retained earnings given 16 lakh 40,000 plus 4 lakh. Dividend paid 20 lakh 40,000. This we will divide into opening balance and current year. How much is opening balance? Retained earnings had a credit balance of 6 lakh. And current year how much? 20 lakh 40 is the total. 6 lakh if I take it out, I'll get 14 lakh 40,000. Okay. So please write down this chart. Retained earnings 16 lakh 40,000 given in the balance sheet. Dividend paid during the year or earlier year should be added. Don't worry about its source. Add 4 lakh, 20 lakh 40,000. Then you compare. Opening balance was 6 lakh given in the problem. Balancing figure current year 14 lakh 40,000. Current year 14 lakh 40,000. Now opening balance is anyway pre-acquisition element, part of net assets taken over. But current year 14 lakh 40,000, one portion is before acquisition and another is after acquisition. And how do you divide? How do you allocate? Based on number of months. How many months? It was acquired on 1st of October. Means 6 months. 30th September means. So current year profits 14 lakh 40,000. 6 months will be pre and 6 months will be post. Six months will be pre and 6 months will be post. Okay, some of you are telling buffering. Any point I need to explain? Any point you missed regarding this pre-post? Okay, fine. Hope you have taken down this part. Let's go further now. Okay, so we just discussed retained earnings. Opening balance is 6 lakh and entire 100% because holding company is 100%, nothing to NCI. Now in the current year, we compute 14 lakh 40,000. 7 lakh 20 is pre, 7 lakh 20 is post, 7 lakh 20 goes to goodwill, 7 lakh 20 goes to con PL. Okay, some person is asking retained earnings portion, kindly explain. Okay, I'll do once more. Listen to me carefully. Retained earnings in the balance sheet 16 lakh 40,000. And I told you adjustment, dividend paid should be added 16 lakh 40,000 plus 4 lakh. 10% on 40 lakh, 4 lakh. So total comes to 20 lakh 40,000. Now 20 lakh 40,000 is the total accumulated profits. Should divide into opening balance and current year. Opening balance given how much? 6 lakh. So in 20 lakh 40,000, 6 lakh is opening balance. Balance 14 lakh 40,000 is current year profits. But in the current year, acquisition is happened during the year. So 14 lakh 40,000, one portion goes to pre, one portion goes to post. That is 7 lakh 20 is pre, 7 lakh 20 is post. Let me give a quick chart if you want. 16 lakhs 40 plus 4 lakh, dividend paid 20 lakh 40,000, opening balance 6 lakh, current year 14 lakh 40,000. This will divide 6 months, 6 months, 7 lakh 20,000 and 7 lakh 20,000. This is 6 lakh, 7 lakh 20 pre and 7 lakh 20 post. Okay. Okay, fine. Next, fair value adjustment, revaluation adjustment. Since it is entirely 100% pre-acquisition nature, so that will go here, and depreciation we calculated, that will be a post-acquisition element. If NCI share was there, that would have come here. So fair value adjustment entirely pre, so goes to goodwill. Depreciation is expense, subtract in CONPL because it is post. And regarding dividend paid, I told you, don't worry about the source. You subtract in CONPL. We added earlier, now you're subtracting. And if you have any NCI share, that also would have come. Dividend paid, you simply subtract. That's all related to subsidiary company heading. Subsidiary company done. Holding company, what and all will come? Investments will come. Investment will come in the goodwill column. Investments will come in the goodwill column. Their reserves will go to CONPL. I told you CONPL means, please understand, it's not CONPL alone, it's other equity, includes OCI, reserves, retained earnings, everything. Okay. Then their retained earnings also will be there. Do the total, see what you get. NCI, I will tell you, 0, don't worry. Okay, so what are the total you're getting? Okay, so total you're getting a positive number, so you can say capital reserve or gain on bargain purchase, and other equity anyway you're getting 62 lakh 14,000. So because uh, we are getting a gain on bargain purchase in the exam, when in the balance sheet you should show 62 lakh 14,000 plus 37 lakh 70,000. Total should come in the balance sheet as other equity. Other equity will be sum of these two. Which is from 99 lakh 84,000. So when you prepare the balance sheet, other equity should be sum of these two numbers. Okay, hope you got it. You can make Shubham Shai Ganesh Shesh asking should make a statement of changes in equity. You can make that is practically we do, but for examination purpose this much is sufficient, because practically you have to give lot more notes to accounts in detail and all. So if you are able to get the answer right, that's sufficient. For exam point of view, you limit only this much. Okay, let's go to balance sheets. Before we go to balance sheet, let us do a note on PPE, because quite a few adjustments are there. Fair value adjustment is there, depreciation adjustment is there. So let's do a note on that. Note on PPE. Okay. So land and building 30 lakh by holding company, 36 lakh by subsidiary. Fair value adjustment increased, so plus. No information on depreciation, zero. So closing 86 lakh. That is 30 lakh plus 36 lakh plus 20 lakh minus depreciation 86 lakh. Similarly, plant and machinery, holding company 48 lakhs, subsidiary company 27 lakhs, fair value adjustment, revaluation profit 11 lakh 50 minus depreciation 50,000, and that is coming to also 86 lakhs. So total 172 lakhs. Other notes also you can do, my dear friends. Inventory 24 lakh plus 7 lakh 28,000 plus fair value adjustment is there. If you have any revaluation profit, unrealized profit would have subtracted, that you do, minus, nothing is there. So that is equal to 34 lakh 28,000. Similarly, trade receivables, no adjustments, but write it. Cash, no adjustments, but write it. Trade payables, there is one adjustment. Fair value adjustment is there, that you can add. Borrowings, no adjustments. You can just write this, so that all calculations from this directly you can take it to balance sheet. A good format. Holding company, subsidiary company, any adjustments you do, and depreciation when you subtract, then closing balance. Step marks allotted. I will discuss the step marks part slightly later. Uh, Kanushika Dhanuka, sir, if NATO has to be computed basis of fair value, then how do this working? This will take care of all those things, because we have taken the share capital, there is a pre-acquisition profit, fair value adjustments. If I sum all the three, you get net assets taken over. We are showing 111 separately. If you do total, net assets will come. So you don't have to worry about it at all. Akshadasha, sir, can you please upload the answer also? Sir, can you please upload the answer also if possible? Take a lot of time. You can always take the screenshot, my dear friend. Screenshot is simplest. You can take it easily. And the video will be available later also. So anytime you can come and collect. You can come and verify it. No problem. You can note it down. Kanishka Nanka asking, no sir, I mean net asset taken over is fair value of assets not data taken over. Yes, yes. Net assets taken over is fair value of assets taken over. Yes, it is. To be more specific in the technical word, net identifiable assets. Fair value of net identifiable assets. That is the word used in Ind AS 103. Yes, it is. Net assets taken over means fair value of assets taken over. Okay, so let's go further. Hope you have taken down till this here. Let's go to balance sheets. PP, we have done the working note just now. Intangible, no intangible. Inventories, you have done the working note. Trade receivables, you have done the working note. Cash and cash equivalent, you have done the working note. Share capital only from holding company. Other equity working notes. NCI, nothing is there. No long-term liabilities, no other things, short-term borrowings. Trade payables, you have done the working note. That's all. In total, 2 crore 30 lakh 40,000. Okay, you have some trade payables, you can subtract. Bank overdraft, I'm showing it as trade payables. You can make either note of it, you can take a picture of it, no issues. Okay. One thing, my dear friends, one question I wanted to ask. In this problem, goodwill, is it calculated under fair value method or proportionate method? Please answer it in the comment section. Is goodwill followed under fair value method or goodwill under proportionate method? Please try to have a comment. Proportionate method or fair value method? Some of you thinking fair value. Okay, it's a tricky question. It does not matter. It does not matter. Why? Because when there is a difference between proportionate method and fair value method, when does it arise? When does it arise? Only because of the difference in the NCI. If NCI itself is not there, then there is no impact on goodwill. I repeat, my dear friends, the difference between the goodwill will come because of the treatment of NCI. If NCI itself is not there, then goodwill don't matter. So some of you are asking old syllabus, the answer is same. Old syllabus also, answer is same. No difference for old syllabus also. There is no difference between proportionate method and fair value method when it is 100%. Okay, fine. Now, before we go further discussion on these things, I would like to address few questions here. First, if balance sheet don't tally, what you should do? I know what will you do. Make it tally. That is your articleship learning. Criminal mind. Anyway, if balance sheet don't tally, one request. Don't write two different amounts to show that you are sincere. If you write the balance sheet total different, it is an invitation for the valuator to deduct marks. If the balance sheet total don't tally, my request, write the same amount on both sides. That is professional approach. That is basics. Now question comes, which you need to put it up. Naveen Satya is saying, so one show working note, I'll show in 1 second. Give me 1 minute, I'll show it to you. Atul Narayan sir, earlier working, how do we take 60 lakh as investment? I'll come to it one second. Let me just explain it. Now, if balance sheet don't tally, then you have to write same amount on both sides. Which amount will you show? Asset side or liability side? Your answer may be right different. See, some people think asset is correct. Some people think liability is correct. Actual answer is something else. I'm not talking about it. What I'm telling you, most probably your right answer is close to the asset side, because the mistakes usually happens, observe my words carefully, usually happens on liability side. So on a safety purpose, to be more closer based on observations of the student's mindset, write the asset amount on both sides. Now, once you get the asset amount, how do you look for differences? For example, if this balance sheet total was 10 lakh, let's say, but your total is 9 lakh. So 1 lakh is the difference. So first thing, you should search for difference in adjustments. That is there any depreciation thing you missed? Is there any unrealized profit you missed? Revaluation profit you missed? Look for those amounts. That is first thing. Second thing, more importantly, difference amount divided by 2. Like in the example I telling you now, 1 lakh is the difference, divided by 2 means you get 50,000. Why? Because there is a chance you have done duplication of errors, meaning instead of subtracting, you might have add. Like depreciation, you're supposed to subtract. By chance, you added. The difference will double then. So when you divide by 2, you'll be able to find such difference. Second point. Third one, whatever the difference you get, divide it by 9. And once you divide by 9, if you get an absolute amount without any decimals, there is a chance you have interchanged the numbers. For example, instead of writing 34 lakh 28,000, you write 32 lakh 48,000. You have interchanged the digits. In such case, the difference will always be divisible by 9. So difference divided by 9. If the answer has answer happened to be an absolute amount without any decimals, then please search for the interchanging digits mistake you could have done. Beyond this, you are extraordinarily capable of doing mistakes. I cannot help. You have to understand your own mistakes. You have to learn from your own mistakes. But these are the 3 structured steps in which you can address your difference in balance sheet totals. That is one thing I want to discuss. Other thing I want to discuss is this, that is, should you write notes to accounts? If you write notes to accounts, will you get marks? Or can some people comment it? Writing notes will give you marks. Yes, will you get marks for writing notes? If you write notes, will you get marks? Does notes carry marks? Okay, yes, Ajay Chandra is telling yes. Okay, so Shreyas, Aishwarya, no, okay. This is an interesting question. It's not a yes or no examination question. Listen to it. Writing notes may not give you marks, but if you don't write notes, you will lose marks. Did you understand? Shall I repeat once more? If you don't write notes, they will deduct marks. But if you write notes, Just 1 second. If you don't write notes, they will deduct marks. But if you write notes, they may not give you marks. Interesting, right? Okay, why it happen? If your answer is right, then they will search for, okay, he has not written these notes, okay, let me deduct marks. If your answer is wrong, they will not be like, oh papa, he has written notes, let me give him marks. No sympathy effect. So in the examination, you have to work little bit smartly. What do you mean by that? First, complete the answer. Get till here, get your balance sheet tallied, leave some space, go to next problem, complete the paper. If time permits, come back and then write the notes. For two reasons: if your answer is wrong, writing notes don't make any difference, you lose time also. Second, writing the notes may take, let's say, 6 minutes, but how much marks you lose? Maybe let's say 2 to 3 marks, 2 marks you lose. But in that 6 minutes, if you can write some in that same 6 minutes, instead of writing notes, you can write on full-fledged question like accounting start question, share based payments. Let's say you get 8 marks question, you get 6 marks extra, right? Instead of losing 2 marks and get 8 marks, you lose only 8 marks. I repeat, in the 6 minutes, instead of scoring 2 marks, you better try for 8 marks. Incremental 6 marks will come. What do you call? Opportunity notes, opportunity cost. You may lose 2 marks, you get 8 marks, you get incremental benefit of 6 marks. We can make 194 to 200, 394 to 400, 44 to 50, 34 to 40. Important. That's how you will optimize. So what you should do? Complete the write the consolidation problem, leave the space, 1 page, go to next problem, complete the paper. If time permits, come back and do it. That is, this proposition is true provided you know that 8 marks question. If you don't know that 8 marks question, at least this 2 marks let it come. No, the question of opportunity cost comes only when there is opportunity cost. The question of opportunity cost comes only when there is opportunity cost, right? So therefore, what you should do? Write the paper, complete the answer, leave space, go to other questions towards the answer, towards the end. If time permits, then come back and do all these cosmetic changes, writing lines, heading, all those things don't do at the beginning. Unnecessary waste of time. Writing particulars, amount, you lose 2 marks. Yeah, you try to score 6 marks, but the 2 marks also becomes important towards the end, provided you have sufficient time. So this is how you need to manage your time in exam. Time management skills, these are the things to be understood. So here only, if you want, if time permits, statement of changes in equity, opening balance, divide this into reserves, then other equity, OCI, whatever you want, you can do it, no problem. Fine. Okay, so this is what this is going to be. I know there's some problem with the internet today. Don't worry, I will make sure that from tomorrow internet is set right. I'll go to place where internet is available. Tomorrow you will not have any issues. You will get the complete straightforward picture. Don't worry. Sorry from my side for today. Tomorrow onwards, no time lag will be there, no issues will be there. I'll go to studio and record it. No problem. I'll studio and I'll play it, and no problem. I'll make sure that no buffering will be there. I'll go to a good place. Today, I'm also experimenting. I hope you got some confidence on consolidation, my dear friends. Any questions that I need to address now? I've explained all things, only 3 things to be discussed: chain holding, multiple acquisition, and disposal, loss of control. These are the 3 things I need to consider. Okay, I will share the, okay, so you wanted working note slide? Yes, working note slide. Working note slide, yes. Okay. I hope you got some confidence now in consolidation is very, very important. So we just solve one problem, but I think solving one problem is equal to 10 problems now, because we have discussed so many adjustments, including dividend, revaluation, depreciation, everything we have discussed. Very good. Now, what is the next goal? Next problem, I don't want to solve it now. Because internet is also an issue. I don't want you miss those chain holding problem, because chain holding problem, in my opinion, is very important. It is in previous question paper, it is in MTP, it is in study material, it is there everywhere. So chain holding problem, many students have not scored it well in the last exam, previous exam. So people have that apprehension problem about chain holding. So we should do it in detail. So what's our target? I will leave at this point now. I will do the chain holding problem tomorrow, so that this format you would have got some confidence and you get some time to digest. So other problems you would have done in various methods now. In my suggestion, forget about it. To the extent possible, those problems solve in this format. Any doubts? My Telegram channel is there. Please ask your doubts. I'll try to reply at the earliest possible. So before tomorrow we go to chain holding, you are very, very comfortable in the existing format. I want you to be very, very clear about this format, and you should be an expert in this. You should be in a position to teach others. There's a level of confidence you should have, and in the exam you should do consolidation first. Before any other questions, you can even look at it. That should be the level of preparation. That should be the level of confidence you need to have. Okay. So that's my point. So please try. If you have any doubts, please go to my Telegram channel, ask doubts. I will reply to that. So before tomorrow we start, you should be ready with that. That's one point. One more point, I will be sharing about 20 to 25 multiple choice questions tomorrow. Today I will share the link in the group for multiple choice question on consolidation with various adjustments, one line, two line questions. About 25 questions will be there. So tomorrow I would like to show you the results and see how many people have performed well and how many people, where the pain point is. I would like to discuss that point. It's not cost, it's free. 25 questions. Please make sure that you have to solve for your benefit. I'll also put one more choice ceiling. I don't know. If you don't know, please select it. Don't select any one option. Don't make a guess. Objective there is not to make marks. The objective is there to assess yourself and identify the pain points and make better person, make your better understanding in those areas. So I will share 25 MCQ question in my Telegram group in about 2 to 3 hours from now. Before tomorrow class, please make sure that you solve it before we can go to the next set of problems. And any doubt you come across, please make use of the technology. Please ask the question in the group so that everybody get the best benefit out of it. I hope things are clear. Look at some questions. General doubt, is there any format like this for business combination? For all the standards I will use charts. For all the standards I will choose charts. For everything, beautiful formats. And if not formats, steps. For example, in business combination I have steps, and some problem are having that you are not able to solve, reverse merger problems, demerger problems. I will address everything of those. You don't have to worry, but I'll not be solving too many problems. It's a revision lectures, but pain point I will definitely address it, because I've taken a poll in the Telegram channel. Based on that only I'm replying to that. So objective is to give you what you need in these difficult times. There is no other objective beyond that. Okay, so one problem is that you have solved few problems. Learn Club lecture about the clarification I've given in my channel. So presently I don't associate with them. That's all my thing. Beyond that I'm not allowed to do it. So I think things are clear now. Any doubts, make it note of it, keep asking it, and tomorrow when we start, we can have doubt clarification session first, then we can go further. So even if I spend extra time on consolidation, I don't mind, because this is the foundation of every other standard. So questions, you can try it. Include all quality questions in the notes in the group, you can download it. Okay, so thank you so much, hope you enjoyed. Try your level best. 3 fundamental accounting assumptions: going concern, never give up; consistency, put the efforts daily; and accrual, don't worry about the immediate results. The benefits are getting accrued, one day it will come, don't worry about it. Okay, so thank you so much, enjoy well. Tomorrow we'll meet at same time, 11 o'clock. Tomorrow onwards, I assure you, no delay in buffering and all. You will get the full benefit out of it. Okay, so happy reading. We'll see you tomorrow at 11 o'clock. Thank you so much.